Tesla stock at the time of recording this video is actually red on the day. Now, this could change by the end of the day today, and we have some big news to share with you. Short sellers are covering on their short positions in some massive numbers heading into Tesla earnings tomorrow. Now, I will just share that news with you right now. You have 2.1 million shares today that are being covered by hedge funds and institutions. I don't know about you guys, but that's a pretty good sign that Tesla's fallen enough that you're not going to drop after Tesla earnings. Now, that's obviously a possibility. We will discuss that a little bit throughout this video, but we have a ton of news to get into. More confirmation, as it looks like, Elon Musk is not in the talks to buy TikTok, which I think is good news for Tesla. But now we just have the earnings uncertainty that we need to get through first. Also, what's pretty remarkable today is Nvidia is bouncing back up over 6% today. But a lot of the big winners are actually your AI software names. The companies that are using AI and actually creating products and services from this. And I believe after Tesla earnings, we will see Tesla get a lot of that same recognition. At this point, Tesla is still viewed as an auto company, but there is some specific catalyst that we are going to hear on the earnings call, and I believe confirmed, that will show Wall Street Tesla isn't really a car company anymore. It's an AI company, and that should have a big positive effect on Tesla stock. But first and foremost, let's share some of your Tesla stock news today and the latest developments, as well as what is going on in the marketplace today. Tesla Charging on X says all V4 posts in North America can now charge up to 325 kilowatt hours for the Cybertruck. And we now have the new Model Y that is on display in New Jersey at Tesla's Paramus store. And in the news today, owners of the Lucid Gravity SUV will gain access to Tesla's supercharger network starting January 31st. Also in the news today, US President Donald Trump told reporters on Monday that Microsoft is in talks to acquire TikTok and that he would like to see a bidding war over the app, which, as long as Elon is not in those discussions, that is good for Tesla. Goldman Sachs, in a new note out to clients today, says, quote, "We believe Tesla remains well positioned for long-term growth, given its leadership position in EVs, the breadth/depth of its technical capabilities in AI, software, and hardware, and its ability to benefit from a full set of solutions, including in charging and storage." Quote, "However, we see a handful of offsetting factors. These include, 1, we expect the ramp in FSD to take longer than Tesla currently targets." I love this one because you know one of the biggest catalysts we're probably going to hear on the earnings call? FSD is entering the Chinese market soon. So, you know, that kind of, it just seems like a lot of Wall Street guys right now just don't really understand what's going on with Tesla. They try to make these notes and sound smart, but they really have no idea what's going on with Tesla. And I would argue that FSD is still on track to advance into robotaxi for at least California and Texas this year. If not, if regulatory kind of approvals come in, if the deregulation is quick this year, you could see that in a couple of other states as well. Come on now, it's January 28th, and they're already making conclusions that it's going to take longer for FSD to launch. I don't buy that. Number 2, they say, "We believe auto fundamentals could remain volatile in the near term, with lower pricing and initiatives a headwind. And we expect delivery volumes to be somewhat lower than Tesla's outlook for 2025. Now, Elon Musk guided for 20 to 30% delivery growth last quarter. That is a big catalyst for the earnings call. Okay, if Elon walks that back, that's not going to be great. Now, Wall Street's expecting about 16% delivery growth for 2025. 20% would still be good. 30% would be excellent. And there would be a lot of upside associated with what I believe we'll get is kind of the same old, same old. Elon's most likely going to come out and say, yeah, we expect 20-30% delivery growth. And it's not going to be a, huge shocker for a lot of us, but Wall Street may see that as a shocker. Now, what's also interesting about this note is they say that lower pricing and initiatives could be a headwind. In fact, we just launched the Model Y for pre-orders in the US. Deliveries start in March, and the launch series is actually about 9% more expensive than the old Model Y. So as long as there's good demand for that, you should see much higher profitability per car because FSD is kind of discounted in the launch series pricing. So that tends to be like 80-90% net margins. You should actually see auto gross margins well in excess of 20% on the Model Y. Probably 23 to 25% auto gross margins on that vehicle. I don't think that's a headwind for Tesla. Sorry, I just don't think so. And they say, number 3, we see valuation as full. And that's kind of laughable because if you just stick with the same multiple, and if we can get some EPS growth in there, like FSD launching in China, in Europe this year, maybe Optimus starting production by the end of this year. What about robo-taxis? None of these things are going to be good for EPS or profitability. I have an issue with that. Now, we'll talk about this in the next video more in depth. In fact, the next video is going to be just about Tesla earnings, my expectations, what could come from Tesla earnings, whether the stock is likely to go up or move lower. I'll share all of that with you in the next video. But here you have the top questions that retail investors are asking Tesla to answer coming tomorrow. Number 1, is unsupervised FSD still planned to be released in Texas and California this year? And what hurdles still exist to make this happen? Now, that's a great question. That's a critically important question. That is one of those big catalyst questions for Tesla. How Tesla answers that will be one of the big drivers of how Tesla stock performs. Now, Tesla tends to answer the top 3 questions. So number 2, is Optimus now mostly design locked for 2025 production? We heard recently that Optimus could be on track by the end of 2025 to reach production of 600 units per week. Over 52 weeks, that's about 30,000 Optimus robots, okay? That I don't think is something that Wall Street is even considering at this point. That Optimus could actually be selling by the end of this year to maybe other companies, okay? Not even in the thought process or the modeling from mainstream kind of Wall Street guys right now. And I think that's something we should consider heading into tomorrow. And number 3, when will Tesla start selling Optimus and what will the price be? Okay, so again, that's kind of goes with number 2. If that's answered and it's confirmed that that will be this year, that is massive. Now, in market news today, according to Wells Fargo, tariffs are expected to hit the US. The impact of tariffs is certainly borne by the consumer, Wells Fargo's Brendan McKenna says. So in that sense, tariffs are inflationary, kind of by definition. The Fed is expected to pause cutting interest rates tomorrow, but all eyes are on how it might be bracing for the potential inflationary impact of Trump policies. McKenna acknowledges potentially mitigating factors such as a strong dollar and exporters' willingness to retain U.S. market share, both of which could curb import prices. He expects inflation to keep cooling, allowing the Fed to cut rates a couple of times this year and yields to hover around current levels. That's actually not a super bearish take on tariffs. Elon Musk's X begins its push into financial services with a new Visa partnership. Visa will enable X users to move funds between traditional bank accounts and their digital wallet and make instant peer-to-peer payments like with Zelle or Venmo. It's the first concrete move from X to create a financial ecosystem for the social media site. Elon Musk's X struck a deal with Visa, the largest U.S. credit card network, to be the first partner for what it is calling the X Money account. Nvidia news today is actually pretty good. Tigris Financial Partners upgrades Nvidia to a strong buy from buy with a price target of $220 per share, likely helping to fuel some of that recovery. And it will be especially important to see how earnings turn out on Wednesday and Thursday. So Wednesday pre-market, tomorrow pre-market, you have ASML. That's the company that services Taiwan Semiconductor's equipment. It's the company that sells them the semiconductor equipment. Progressive, T-Mobile, ADP, Teva, General Dynamics, NASDAQ, VF Corporation. But Wednesday and after hours, you have Tesla, Meta, Microsoft, IBM, Lam Research, ServiceNow, Celestica, Wolfspeed, and Western Digital. Obviously, these 5 companies here, Tesla, Meta, Microsoft, IBM, and Lam Research, these are the important ones for Nvidia. To a lesser extent, IBM, but they do have their own uses for Nvidia products. Really, Microsoft, Meta, and Tesla. Do they keep their CapEx guidance the same? Do they raise that? Do they have good, bad things to say about DeepSeek? That's the question. The reason Nvidia sold off so much, and the reason, certain areas of our markets have not done well in the last couple of days, is because of the fear that CapEx budgets could be lowered. So if that does not happen tomorrow, you're likely going to see a pretty damn risk-on market, assuming we have good earnings from these names as well. Now, Thursday, you will get UPS, MasterCard, Dow, Blackstone Group, Nokia, Southwest, Allergo, Caterpillar, Comcast, and Mobileye in pre-market. And after hours, you have Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Decker Brands, United States Steel, and SkyWest. And then Friday pre-market, ExxonMobil, Chevron, AbbVie, Colgate, Phillips 66, and Charter. Now, durable goods orders this morning came in really weak, coming in at negative 2.2%. Last month was revised from negative 1.1% to negative 2%. So last month was worse than expected, or really November. And then December was even well worse than expected. Okay, so bad economic data. It didn't really affect the markets today. I guess there's other things going on that are affecting treasury yields as well. But if you take a look at bond yields today, bond yields are actually climbing almost 4 basis points, which I think is just some, recovery, if you will, from yesterday's, bond yields coming down 10 basis points. Bond yields came down 10 basis points yesterday as investors were fearful and seeking a flight to safety following Nvidia, their record sell-off. And now it's probably just, retracing a little bit of the loss from yesterday. Now, if we take a look at the other sets of economic data today, S&P Case-Shiller home price year over year came in mainly in line with expectations. CB consumer confidence was expected at about 104. It came in at 104.1. Last month was revised up from 104.7 to 109.5. So that is a sharp drop from December heading into January, but still that's pretty good for overall consumer confidence. Richmond Fed Manufacturing Index came in better than expected at -4 versus expectations of -8, and last month was at -10. Now, your 7-year bond auction today came in pretty good as well. CNN's Fear and Greed Index is still holding on to fear at 44, but almost in neutral. So yeah, we're still trying to get into a neutral place. And that just makes me a little bit more bullish, right? If markets are still in fear on the CNN Fear and Greed Index, that's normally a good time to buy, right? That's normally not when you want to be going all in on puts and playing super defensive. Now, market momentum is fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. And safe haven demand is fear. And junk bond demand in greed. The percent of stocks trading above the 50-day moving average is actually declining today. You have 1.3% of all stocks falling below their 50-day moving average, coming in at about 47% of stocks trading above their 50-day moving average. So you only have 47% of stocks above their 50-day moving average. Like, this is a very still weak market. There's not a lot of positive breath right now. And I think after the Fed tomorrow, I think after earnings tomorrow, we could be taking a big, breath of fresh air, of potentially bullish air, if I were to say so myself, as long as we don't get any really bad news from the Fed or CapEx budgets get slashed or anything super dramatic. I think we're priced, way too negatively. Okay, I don't think markets are nearly as optimistic as they probably should be. In fact, there's still a 25% chance, according to Fed funds futures contracts, that we could see an interest rate hike this year. I don't think the Fed has any plans in giving us an interest rate hike this year. And I do think if the Fed is more dovish than expected, which is my belief, if the Fed shows that they're not as worried about tariffs causing inflation, that they do plan to cut a couple of times this year, then that's probably a good thing for small caps. It's probably a good thing for cyclicals. That's probably a good thing for general risk on markets. And if we take a look at the Fed funds rate monitor tool, over here on investing.com, we can see that the markets are not pricing in the next Fed rate cut until June 18th, 2025. And I think after tomorrow, we may actually price that in potentially in May or March if the Fed is, as dovish as I think they will be. The Fed really took this hardline approach in the last Fed meeting. And I don't think Powell wanted to be as hawkish as he sounded. So I think they have a lot of work to do in walking that back a bit. Even Trump said that he basically is demanding the Fed cut rates. Now, is Powell going to just fold and listen to that and start cutting rates? No. But I think he will try to open the door for that to happen down the line. I think Powell's job tomorrow is to open the door for a March 19th cut. As long as inflation doesn't spike, then I think that's the objective here from the Fed heading into tomorrow. Now, currently for March 19th, which I think is really the important Fed funds contract to watch. Technically, May is not pricing in a cut either, but there's a 49.5% chance of a pause through May 7th, and there's a 41.3% chance of a cut. So it's pretty close. There's only about an 8% difference. I think almost certainly the markets are going to at least price in a cut by May. But it's by March that would be the big swing, okay? There's a 70.4% chance of a continued pause, March 19th, 2025, and only a 29% chance of a cut. If we were to see a cut get priced in, that could be very bullish for markets, especially again, if the Fed takes the stance of we don't see inflation as a major issue at this point, which is kind of the opposite of what the Fed delivered on the last conference. And again, I don't think Powell meant to be as hawkish as he came off, but he was hawkish. Now, if we take a look at option activity today for Tesla stock, that is also encouraging. There's a low dollar amount today. You've only seen 48 different trades totaling $30.34 million from hedge funds and institutions. So a low dollar amount, but the positive order value is pretty good at 72, which is the highest we have seen in at least the past week. And the day before earnings, to see a relative breakout of positive option activity in Tesla, I would say is a positive. We can also see from a technical perspective, the last 2 days we have fallen below the 50-day moving average at $393.48. it looks like Tesla should close above this 50-day moving average, and that would be a good sign heading into tomorrow. Now, ultimately, you want to get above that 20-day moving average at about 407.79. Does not look like that is going to happen today. It'll be interesting to see how Tesla trades throughout the day tomorrow before they report earnings tomorrow in after hours. Now, we are set up at a pretty critical junction around this 50-day moving average. If things are good, as I expect Tesla earnings will be, Tesla stock's going to break out from here. Tesla stock's going to rally from here. Technically, you're still in a bullish pattern unless we close below about 375. You're still in the process of making higher lows. Okay, if we close below these lows here, then that would obviously be an issue. And I think, again, you're either going to see a big drop tomorrow, a big disappointment, or a big upside move following Tesla earnings. And we'll discuss this more in depth in the next video. I'll give you the full rundown of my expectations, what I think is going to be important tomorrow, and why I'm so bullish on Tesla heading into Tesla earnings. But if things are bad, you got to be prepared for Tesla to come down here and fill all the gaps and fall to this 100-day moving average around $320 per share. That would be the downside level that we would likely retest. Now, I don't think the 200-day moving average is too likely. That is at $258 per share. I think you'd really have to see something unprecedented, something really nobody is expecting on the earnings call to get down to those kind of lows. So I don't think that's likely, and I don't think a fall in general is likely, but if we do get some surprises that are negative, that 100-day moving average is the level that Tesla stock will likely be pulled to. So with that said, ladies and gentlemen, let me know what you think about this information down below in the comment section. The next video coming out at 8 p.m. tonight is critical that you watch because it's the last update I will be able to give you before we actually get Tesla earnings. So with that said, ladies and gentlemen, thank you for watching. Enjoy the rest of your day, and I will see you in the next one.